this market is going from 2.7 trillion to, call it 12 trillion this cycle, to 100 trillion by maybe the end of the 3032 cycle.
Wow.
As Pal elaborates, the transition from crypto spring to summer typically occurs after the halving event. This phase is marked by Bitcoin's resurgence, with the cryptocurrency bottoming out post-halving before gradually gaining momentum. Bitcoin's dominance begins to decline as investors venture into riskier assets, ushering in the much-anticipated altcoin season. Pal aptly dubs this period as the banana zone, where crypto markets exhibit exuberance and frenzied activity. One of the intriguing aspects highlighted by Pal is the reflexive nature of the crypto market. As more participants join the network, the price of cryptocurrencies tends to surge, further incentivizing adoption. Conversely, downturns in the market can trigger strong bearish sentiments. Pal emphasizes that despite the market's reflexivity, it remains underweighted due to its nascent stage, presenting ample opportunities for growth.
Crypto spring transitions to crypto summer, and that's usually happens after the halving. And after the halving, you see something that I know everybody's getting shit for right now, is if you go back to 2020, after the halving, what happened? ETH Bitcoin bottomed.
Right.
And then it slowly based, and then it started outperforming, right? That's when the market takes on risk and goes out the risk curve. And that's when you start to see Bitcoin dominance coming down, all of that kind of stuff. That's what the summer is. It's also altcoin season. It's when we hit what I commonly refer to as the banana zone, when everything goes bananas, right? The bit of crypto magic. Now, this banana zone is interesting to me because we've got this new source of demand. This is the most reflexive market ever, because the more people join the network, the more the price goes up. The more it encourages people to join the network, the more the price goes up. And obviously that reflexivity works in reverse, which is why we get strong bear markets. But basically, the world is underweight this asset because it's still a new asset and it's an adoption curve. So over time, more and more people join the network as investors or users. So I think we can see a second wave of panic into the Bitcoin ETF from people. You know, I was speaking to a good friend of mine who's a kind of very well-known hedge fund manager, or ex-hedge fund manager, and one of the billionaire crowd. And he's like, Raoul, when do you think Bitcoin hits 100,000? I said, probably the summer, you know, with the kind of demand and the ETF. Kind of feels like sometime in the summer. He's like, you know, so much wealth is getting made in crypto, it's making the billionaire class nervous. I said, what are you talking about?
What?
And this was a lovely insight. He's like, okay, there's two groups here who all they care about, they're so rich, all they care about is where they fit on the rich table. Right? They can't be the Silicon Valley guys, but there's this whole group that compete with each other for how wealthy they are. And so he said, they're all going to panic that they're going to lose relevancy. So they're going to panic in. They're going to panic into Bitcoin, you know, the Bill Ackmans of this world and, you know, all of these people. So I thought that was funny. But he also said the other group is the billionaire property developers. He goes, these guys are losing relevancy fast because of commercial real estate. And these guys have been lording it around, you know, Palm Beach and everything else as the kings of the hill. And they're worried about their relevancy. Because, you know, once you're worth $5 billion, you know, it's not a wealth game anymore. It's like, am I richer than my neighbor? That's all they care about. And so he's like, you know, I think that they'll probably get involved as well. And I think that mindset is pretty true everywhere, right? People see Bitcoin going up, and then you hear that your mates, you're playing golf or having a drink, and he made money in it. And then you think, I've got to make money in it. And this is the reflexive loop. So that's what crypto summer is all about. It's the FOMO, the madness, the insanity that crypto becomes. But it also drives adoption, drives money into the VC again. It flushes money through the system, allows people to build new product, which is the next cycle's gains and all of this stuff. So that's great. And then we go into fall. And this is where the complications lie. crypto fall, which we historically 2025, they've generally finished at the end of the year. We don't really ever know exactly. I think this cycle's maybe started a bit earlier. I don't know. And falls can be the most tricky part. This summer is the easy bit. You just shut up and do nothing. And number go up. Fall is tricky. So if you go back to 2013, we had a 50% sell-off. People thought it was done because it had already gone up, I don't know, 20x or something stupid. It then corrected 50%. Everyone thought it was over. And then it moon rocketed in just a way you can't comprehend. Then you get to 2017. Same. 2017, everyone kind of thought it was over early summer. And then it did, I don't know, 10x from there. It was bananas, right? That is really hard to deal with because 2021 was a stunted cycle. We never got the accelerated final leg. We had the huge correction. It went up, poked its nose back up in the highs, collapsed. Everyone's got PTSD from that. The real money was made in those previous two bull markets in terms of percentage returns. Everyone now assumes it can only go up 3x from the all-time high. There is actually no evidence of that. Maybe something was weird in the last cycle because the other ones did a lot past the all-time highs. So how I think of it is a distribution curve. Middle is it kind of does what it's supposed to do until sometime mid H2 2025 it tops out. Okay, that would be normal. That would be Bitcoin as a price target of, call it 200,000, something like that. 3x the all-time high kind of thing. That's, I would give a 60% probability. I think there's a 20% probability that people who are calling this a left translated cycle, i.e. we brought forward demand because of the ETF, it dries up, we're overperforming for this stage in the cycle. I think people saying that tend to be one cycle people because they only saw the last cycle because others have outperformed earlier on. So anyway, okay, there's a 20% chance of that. Then there's a 20% chance that this turns into a full-blown bubble cycle, a 2013, 2017, because of this new dynamics. You throw in an ETH ETF as well. You throw in, the $65 billion of VC that went into the last cycle. Somebody comes up with some killer applications. Before you know it, there's 200 million people playing a game. There's, stuff like this going on. Okay, that could create something crazier. And I'm continually assessing these probabilities in my head. And because there's so many people who I've noted have PTSD from the last cycle, the stunted top, it's left translated, they're going to take it away from us, starts to move my probabilities that you get a correction and then a spike. You can't predict that because everyone's going to hate you if you're wrong. Like I got hated at the top last time by thinking we were going to have that. Right. So it's also very difficult to manage. So it's complex, I would say, but we don't have to care this year, which is lovely.
Pal sheds light on the evolving landscape of institutional involvement in cryptocurrency. He discusses conversations with prominent hedge fund managers who anticipate Bitcoin's price surge, driven by institutional FOMO fear of missing out. The billionaire class, driven by a desire to maintain relevance and competitiveness, is increasingly turning to Bitcoin as a hedge against economic uncertainties. While the summer phase appears promising, Pal cautions about the complexities that lie ahead in the fall. Drawing parallels to previous market cycles, he underscores the unpredictability of corrections and subsequent rallies. Pal reflects on past instances where market sentiment oscillated between euphoria and skepticism, leading to unexpected price movements.
The entire thesis is this market is going from 2.7 trillion to, call it 12 trillion this cycle, to 100 trillion by maybe the end of the 30-32 cycle.
Wow.
Okay. That's just that log adoption curve that I showed you the internet. It backs out, same numbers. Same numbers if you back out the logarithmic regression channel of Bitcoin, right? You get to these numbers. So this is, I think, in front of us, the largest, fastest accumulation of wealth in all human history. I know it sounds bananas now, but when you double, we double a 2.7 trillion market cap, 5, whatever. But once you double a 12 trillion at the peak of the cycle, it's 25 trillion. Double it again. Okay, these numbers start getting la land. That's exponentials for you. So you need to capture the two parts of this equation, which is the network layer, which is where that value really gets accrued, and the applications layer. The applications layer is twofold. One is some of it's tokenized, and other is the equity layer. You guys are a VC firm, so you are capturing a lot of the applications layer. And all I'm trying to do here is capture that. This is why it's so important. The whole don't fuck this up, but it won't be ETH and Bitcoin that accrues. They get to a certain level, but it's the whole tail of the space being worth more as you start building use cases and whatever. That's where the real game gets played in the end. The real anchoring is here. And that's why an index will do very well over time. And we've seen that from the NASDAQ. New technology comes in, ends up becoming Microsoft at the top of the pile. And it starts moving the whole index, and then it concentrates, and then more money flows into the index, it flows into those, and before you know it, you've got this reflexive loop going on. So, but we don't have that ability right now. So, it's a complex game, which is what we farm out to hedge funds to do it, because it's their job, and give 14 hedge funds. Other people, there is a tokenized, I haven't used it, but there is a tokenized index. Somebody's got a token. I don't know how legal it is, what we can do. There's also the Bitwise have got a product, but then those are closed-end funds and that have its own set of problems. So it's not solved yet to make it super easy.
Pal adopts a probabilistic approach in assessing the trajectory of the crypto market. He delineates 3 potential scenarios: a conventional cycle peak with modest gains, a truncated cycle influenced by additive demand, and a full-blown bubble akin to the 2013 and 2017 bull markets. Pal emphasizes the importance of remaining vigilant amidst evolving market dynamics, as the true potential of cryptocurrency wealth accumulation unfolds beyond short-term market fluctuations. Pal envisions a transformative journey towards mass adoption of cryptocurrency. He projects exponential growth in the market cap, envisioning a transition from trillions to tens of trillions in valuation. Pal underscores the significance of both the network layer and application layer in realizing this vision, emphasizing the role of innovative use cases and infrastructure development. Please like and subscribe my channel.